So let's discuss one another set of earnings. We have with us Umang Nahata, the CEO at Mastek, joining in on the show right now. Umang, hi, morning. Good to have you on ET now. It's been a modest bounce back this quarter that one can see. Tell me, which were the segments that actually led to this bounce?
Hi, morning. Thank you for having me on the show. So it's been a recovery, I would say, all across. Specifically, North America for Mastek really did well. We did a 18% quarter-on-quarter growth in North America. Our UK Europe business, which is bulk of our business right now, also continued to deliver steady growth. So I think it's all across the business. And even if you go by verticals, healthcare, government, and the other commercial sectors, all the three did pretty well.
Okay, quite interesting. Let's talk about healthcare then, because that for UK was a little bit
Yeah.
volatile from what one can see. Has it stabilized? Is there any visibility that you have for the next few quarters? If you could just give us some sort of guidance.
Yeah, sure. So I think healthcare is a key vertical for us. We largely work for the National Health Services UK, which is our biggest customer here. I think as the UK government starts stabilizing its policies and starts acting upon the commitments it had made, healthcare clearly is one of the top priorities they had. And we see a lot of spend and directional spend happening in healthcare in terms of especially prevention, which allows them to really deal with the backlog that they have. And there's also a lot of data-driven analytics in terms of helping them manage healthcare, helping them better with scheduling. We've started seeing a flow down of that kind of directional investment from the government to us. We've seen good recovery in healthcare this quarter. It's been the largest order book in healthcare amongst all the other areas that we had in UK government. And we continue to be very positive about the future outlook. I think it's been a sector that has gone up and down, but from what we had said last time, it had already hit rock bottom then, and now I think all the path ahead is going to be very positive for healthcare. So we are really bullish about UK healthcare going forward.
I'm just curious, do you expect any specific tailwind as well or upside from the UK FTA too, which is currently under discussion?
Yeah, I mean it's still under discussion, as you had said. It's a key deal for us. There are still active negotiations, but yes, a change there. I don't know whether it will really impact the coming Q3, but in the long run, yes, our data business there is something that we are really bullish about, and hopefully will deliver some significant changes in the UK for us.
America growth as well, because that too has been strong for you. Fair to say that discretionary demand has bottomed?
Uh, fair. That's a fair assessment. So I think generally the discretionary demand has come down, but from where we were looking at the overall segment, there are still pockets where a lot of especially in the Oracle kind of business, where it continues to have the on-premise to cloud modernization kind of business still continues to do well. There's healthy demand in the US for US specifically. The on-premise to cloud business, which we might call as discretionary, continues to be quite healthy. So that segment continues to do well. The UK and Europe Oracle demand is pretty steady, but US is definitely bullish on still the discretionary spend on Oracle.
Okay, fair enough. What about your order backlog that stands at about 2,190 odd crores? There's been a 17% growth year on year, though on a Q on Q basis, it's quite flat. So what is the deal pipeline? Is it getting very competitive? Will you see a sequential growth picking up, or will it remain stagnant?
Yeah, I would say it's a function of timing for us this quarter. The deal pipeline generally continues to be pretty healthy. We've had really healthy order backlog growth over the last few quarters, and we continue to be pretty optimistic about that. It's just a matter of a few timing of a certain deals that we couldn't make it in time for this quarter, but we see it really bouncing back in the coming quarters, and that's all across our business, not just one particular geography or sector. We feel really comfortable in terms of the deal pipeline that we have, and the order backlog will continue to grow as we move forward. So it's in good shape.
Okay, good to know. Now, despite the 1 month wage hike, you have improved your margins, so it's at about 16.5%. What is the outlook as to where you will be able to sustain your margins for Q3 and down the line despite the seasonality factor?
Yeah, I think we've been pretty active on really relooking at our margin positioning that we had. We had a rough Q1 earlier in terms of our margin performance. But those were a few of them were pretty one-timers that we had then, which we've all corrected. There's also a lot of sense of diligence on the gross margin performance as well as looking at our SG&A spend across all sectors. And we've been able to make some important corrections there. Having said that, Q3, as you rightly pointed out, is a quarter which has a lot of holidays and furlough, especially in the UK business. Our current view is, in spite of the furlough and in spite of the remaining portion of the wage hike that we have to deliver in this quarter, we believe we should be able to hold on, and our endeavor is to try to improve from where we are. But we definitely feel we'll be able to hold on to the margin levels that we have.
Though Umang, analysts are expecting your EBITDA margins to reach about 17% by the end of FY25. Is that a reasonable assumption?
That is a reasonable assumption. I think that's where our directional movement is. Like I said, Q3 has a certain furlough or the holiday impact. But if you take the holiday impact out with all the long-term corrections that we've taken and the diligence, like I said, that we've put in, we really are also pretty optimistic that margin percentages should go at 70 and beyond. I think in general, we are very comfortable to deliver the kind of margins that we want. It's just that we want to balance between our investments and our outlook on margins. So we feel comfortable reaching 17. That's not a concern for me right now.
Okay, Umang, great chatting with you. Thank you so much for taking the time out and speaking with us today.
Thank you.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.